Welcome, beautiful people. Welcome to Financial Literacy Program. This is a very good choice you made today, and you're heading towards to become a rich. We're going to learn about the program, how to become rich, how to be wealthy, earn passive income through smart investments. Just a disclaimer. Just read through disclaimer. We are not advising on purchasing trades or shades. It's just a training program. But myself, I'm Ajay Paspati, live in Melbourne. I'm a graduate in project management, worked in IT industry, and I'm a qualified real estate agent and a builder. And I also run non-profit organization. I'm a businessman. I'm an investor. I have passion towards teaching, and also I'm a student. Great sayings. This program is very important. To earn more money, you should be keep learning. There's never ending. There's no age limit for learning as well. Uh, the more you learn, the more you earn. It's very good from Warren Buffett. And to achieve your dreams, we have to have the courage. So that's what all our dreams can come true if we have the courage to pursue them. That's very good. And the most important thing is the primary difference between poor and the rich person is how they manage the fear. We're going to talk about the fear in a few other sessions. So this module have a five sessions. It's a basic module, and this basic modules contain of five sessions. We just go through all the basic knowledge. These are the basic knowledge which you might have already know or maybe learned in your school. But thing is, we have to refresh our memory. Those who already learned, it's good to review, and those who doesn't know, it's very good knowledge to learn. But this is a very the starting point of investing. Way to invest, how to invest. The introduction part we're going to run through today is just basic introduction to the financial literacy, and then we're going to session two going to be in economics about GDP, inflation, CPI, time value money, how they're impacting today's current market. And also in session three, we're going to go through accounting about the company's accounting, basically how to look at the financial statements of any company to identify and determine how the company is performing and whether to invest in company or not. It's all about investing shares and stocks. And also, in session four, we could have a taxation part. We have to know the how tax works, like indirect tax and direct tax in our country. Like the different types of taxes, know about them, and how the taxes are impacting on day to day life, how to deal with it, how to save some tax money. Maybe sometimes as an investor, you may not pay even tax even. So let's know about that in more details. And in session five, we're going to do our own personal financial review, like this personal finance statements. We prepare like we are all have income and expenses. We just go to that assets and liabilities to know about net worth. These are all calculations. And every session has an assignments end of the session. So this is all about the program. Let's start it. So let's know the difference between rich, middle class, and poor. I'm just jumping into topic straight away. We talked going through other stories. Let's to see the difference. What is in the world is a three class of people. Poor people, yes, how they consider. I'm not talking about the poor people who's under the poverty line. I'm just talking about the poor management finance world. So the poor people who has income, like everyone has jobs there, and then they pay the bills like rent bills, entertainment, food, fees, and all. So this like it's a poor strategy because there's no savings, there's no assets, so that's why if they lose a job, they don't have money, and then be kicked off from the rented house as well. So it's a bit tough time for them, especially in pandemic time. They have gone through a very difficult time. And middle class family have income and have expenses, but they have additional thing is liabilities as well. They own a house, could be they pay the mortgage, and they have a school fees for the children, the car loans, credit card, personal loans, because the income is a bit more. Income will be from the salary or self-employed or from the business, especially small business I'm talking about. So they have these liabilities too. And then the rich people are different from these two class of people. How they are, because see the income flow there. Rental income is more. Here is rental income is more than from multiple sources, and dividends, they get dividends, they get royalties. So we talk about those things later stage. So rental income from the rental properties, dividends are there from the shares, and they leaves out a predetermined interest from the bonds and other investments. Royalties from the writing books and all, like Warren Buffett wrote a book and he's been paid for long term. And like Michael Jackson, he has had albums, so he's been paid till royalty till his whole life. And they have assets in real estate, stocks, books, they're all called assets, and they get income from their assets. And they don't have liability and expense, which is very interesting, guys. So we just learn about this process in next classes, next sessions, right? And now just here, just a flow, the illustration about how the poor, middle class, and rich. So poor people have income, expense going, those assets, no liabilities, and middle class have the income, expenses, and liabilities, which we saw that already. There's no assets for them. Rich get income from the assets directly after paying the expense and liabilities through them. It's like, for instance, a corporate company. They get the income from the assets, and then or like before after they do the tax and expenses, and then they get income from that. So we'll know about it more details. And the first question is, guys, people think, yeah, I have a house. In the middle class, people say, I have a house, I pay mortgage, it's worth of million or $2 million worth, and but they say it's an asset. But saying that it's not an asset, principal home, the one who live we live in the house, is not a asset, because you pay income, mortgage from your income, but it's not giving, the house is not giving income basically. So that's why it's not an asset, it's a liability for you. So principal house is a liability. You pay mortgage from your income or salary or whatever the or whichever they earn. So that's what it says. And yeah, many people say this is an asset and it's good. What if you lose a job, and where are you going to pay the mortgage from? It's a bank's money, bank take the house. Yeah, simple as that. All right. Many people ask, like, how I can earn income. I have a job, but it's not enough for me. But there's a lot of ways to earn extra, extra income. You can through like through investments, and anyway, you do some salary like active income. So the income is divided into active and passive income. So the first thing is active income is from the earn money earned from the employment or business, whatever. The passive income is the other categories, which say real estate, investments, royalties, intellectual properties, hobbies, online, like Amazon, YouTube. You make money out of it. And other many other sources, like so for instance, I give a good example of a real estate where there's zero investment. For instance, if you're working full time and you won't earn extra money through real estate without investment, go to any known person who does real estate business, and through your network also, like, so one of your friend is looking to buy a house, so go to a real estate agent and say, hey, my friend is looking to buy a house, and so, and then refer to them, and you get a referral fee. That's an extra income. But if you, same thing with vice versa, where if you want to sell the house, boyfriend, your friend want to sell the house, you can still refer to them and get the income. But if you want to earn more income, you can always do a little bit of certification or what are the legal requirements in your state, so that you can operate independently, like a contract between you and the real estate agent, saying that, hey, I want not only referral fees, I need percentage from your listing. So what that means is, whatever the commission they earn, they can get some percentage, like 25 to 50% from their list commissions they earn. For instance, if they earn $10,000 in a deal, if you have referred to a friend, like who's selling the house, and you refer to them to sell your friend's house, you get about 25% of the listing. But if your friend is buying a house and you went to agent to look for him, and the agent looked for the house for your friend, and then it's a sale, right? So you get 50% from the commission. Means if they earn $10,000, you get $5,000. Pretty good. A referral fee maybe $200 to $500 maximum they've paid. So if you learn more and you get earn more, that's what it is. And let's go through how you can earn through hobbies, teaching, and things like sports, music, or teaching online, like how I'm teaching Udemy now. So any other online, and also you can earn from reselling through Amazon. So buy a product online from manufacturer and sell on reselling. So that's a good example, like earning extra income. If you're tech savvy, or you're like social media, you're on YouTube or Instagram, like Facebook, you can make reels and make monetize that, and with the views you can earn money, but it's a long-term process. So yeah, so these are all the, and also investments, we're going to go through compounding interest, how it works, equity, bonds, mutual funds, bank deposits, and what is fund managers, how they act, how you might have learned about compounding, simple interest and compounding interest. We know about that, how it works in investment world. Okay, let's move on to the next topic. So now, through investment, most of the things they stop because of the various factors, various reasons. Like main thing is the lack of education. They don't know where to invest. Say example, if someone says, "I earn so much of money in shares to become millionaire," but when he can become millionaire, why can't I? Because I don't have education on how to invest in the share market, stock market, what is bond, what all these security bonds, and how they work, whether where should I invest. So this is very how much I can invest even. That's all the education we're going to learn in this in this program. And fear is the biggest wrong, like fear of loss. Like they think, oh, I'm afraid of losing money, that's why I don't want to invest. Say for example, um, uh, loss aversion. Like loss aversion is the one you have more afraid to lose things rather than gaining things. Like if you buy an iPhone and you lose another day, you'll be like feel lost three times than um, the when you bought first time the happier. So when you find it back, you find yes more three times happier than the first time when you bought it. It means it's a loss aversion. So the fear of losing is painful than buying it, or getting rich. So that's the biggest problem. We go through the fear in more detail later part. And people also make excuses. Oh, I have something to do. I have other commitments. Maybe I do next year. I invest in shares. I learn things later on. These all excuses with delays in the process, and they just left behind. And the limiting beliefs, like the lot of limiting beliefs, like such as like in past their family members, or they have a experience of lose money in like investment in a property on a shares, they have bad experience, so they think, oh, it's not suitable for ourselves, so we won't be investing because we had a bad experience. And also some religions, they don't believe in borrowing money and invest in some way, so they lose opportunity of investing and become rich. That's also stopping us. And decision makings, that a lack of confidence, people don't have confidence because they don't have education. That's the main thing. A lack of motivation, and some people need just motivate them. Somebody has to motivate all of them and push them, so, and the blame game goes on if you push them, but it's just motivation, lack of motivation, they don't invest. And poor planning the life, that's very important to have plan your life. So these are the few things like we can say which people just uh, step back investing, but education is most important. Anyway, we see the different quadrants, like four major cash flow quadrants. They are like globally, they're the four categories we fall into, where we income sources are like with employee. First one is employee. Employee is the one who work for somebody on salary based, and he spends his time and get paid. That's one category. Self-employed is a professional expert in his area, in subject matter expert. So he works in his own way, and he also spends time, but he get dollars paid for that. So that's one, and that's the left quadrant. The right quadrant is the business owners, like people who uses other people's time and earn money. That's just business owners. Like any in a restaurant, they run the business, and then people work for them. The owner just earns money because he has establishment charges. He gets the funding wherever it is, like, and he runs a business, so he's using basically others people time. And investors is very smart here. They use money to make money, so they believe in money works hard for them and money makes money. So it's very good thing. The investor, they don't spend much time on the business. They use others people's time basically with their investment. So this is very good. Like OPM is others people money, where business owners use it, and investments use others people time basically. So it means investor investing business in a business, maybe, and then just like he won't spend any time at all, maybe, or maybe very little any earning. So this way smart way we see how the investors work in smarter way. And this is just a bit of a knowledge which I want guys to just have a homework on that. So for instance, HEM, household expenditure measure, this is a very good exam homework to do. So go to a website in your hometown, in your country, whichever relates to you. Because I'm in Australia, I work for Australian calculator, use a calculator to borrow a loan. So how the banks works, like when you apply for a car loan, home loan, personal loan, anything, any loans, how they assess and evaluate your spending compared to income. So there's a calculator, you can go online and put the figures. But as I said, like if we are living in Australia, each person earning, like individual is earning a 2,835 per month. That's the information I got from online. So same with the couple, $4,118, and a family earns 5,378. This is like not included their mortgage or loans. This is just spending with the rent. Actually, it's include rental, just normal everyday spending. So these are all income expenses for normal persons. So based on that, say they take the income and expenditure and they see the net cash flow, and depends on your net cash flow, they decide how much you want and what is the repayment capacity. So use a calculator by yourself, do a bit of exercise. Good. And in Australia, like, first thing, Commonwealth Bank started it in 2012. It was regularized by the Australian government, and later on, other banks also followed it. Yeah, so we learned about the left and right quadrants. So I believe the right quadrants, because right quadrants are rich people. Like, say, if you businessman like Tesla, Elon Musk is a businessman. So, and he also investor. Like Warren Buffett is an investor. Like Robert Kiyosaki is an investor. Like rich people I'm talking about. There are so many rich people like that, investors who make money work for them. The business owners earn money through the employees that work for them. So these are two categories. We can a person can fall into three quadrants, like for an example, Elon Musk. He's CEO of his own company as an employer, and then he is also business owner and also his investor. So it is how it works. So they can be in multiple quadrants. Banks, let's talk about the banks. What's happening with your money in the bank. So if you have a savings in your account, what's happening to your savings accounts? Maybe you have some money, $5,000, in savings account, for instance. You keep that in the bank just for emergency. Yes, you have to keep money for emergency, but you have to see that, just understand what the banks are doing behind you. Not many people know about it, but who knows, they are very smart enough to invest, take the money and use for their own. Say, for instance, uh, say you keep $5,000 in your bank, and some banks pay like 0.01%, and plus additional charges, annual charges, for keeping the account as well. So there's nothing you earn actually. Say, for instance, if you have $5,000 and then 0.01% they're paying, means per year it's only like 50 cents, which is nothing. And also they charge $5, so it's a loss for you. For instance, say they pay $1, so they have some special savers accounts where you keep the money for 1 month without spending it. So if you keep investing that, deposit money there, they pay up to 1%. For that, you get like $50 a year. So, but what other thing, the important thing you need to learn about is this: what the banks are doing with your money. Why they're asking you to keep the money, encouraging you to in, deposit more money, and they pay you some interest. The reason being, they want to reuse that money and lend to somebody else with higher rate of interest. For instance, all the most of the reserve banks in the countries allow the bankers to withdraw people's money up to 90%. Yes, that's true. The bank uses 90% of your amount. Say if you deposit $5,000 and $4,500 been withdrawn, they lend to somebody for like a personal or a car loan up to 14 to 15% or more than that. So they be just a calculation part. We see, hey, you deposit $5,000 in a bank, and then they pay you say $1 per annum, like $50. But with your when they draw 90% of your money, $4,500, they lend to somebody else for 40%. They're earning $675 per year on your $4,500, which is not their money, it's your money. But they pay you $50. So ultimately they're earning $625, which say your money. So, and then the most important thing is, during inflation or pandemic time, bankers were asked to withdraw all the 100% of the customers money, so they can banks have more money to rotate and they can survive. So if banks are that smart enough to reinvest your money and make money, and that's why bankers are rich, so why don't you invest your own money and you become rich instead of making the bank richer? So are you not smart enough to earn money from your savings? Yeah, why not? Everyone is smart, but only thing we need to know, we have to have the financial education, how to earn money, how to invest smartly with your own money. So, guys, this end of the session, I think it's been quick. Hope you understand the basics. So, what I want to do is just do a small assignment for before we go ahead with the next session. Find out a multiple source of income you can generate. We have gone through some multiple sources, multiple streams. So, make your own list, and also just know about what is active income, like salary, wages. Just list out, make take your pay slip, or maybe your casual call, full time, part time. Just take your pay slip and see how much you're earning the income. And the passive income, if you have invested money somewhere, like in the shares, or you're getting dividends on the shares, maybe you rent a property, see how much positive getting and negative getting. Negative getting is not comes under the passive income, it's positive income. So if you're paying a mortgage, like if you have investment property and you rent it out for $1,500, and then you're paying $1,000 as a mortgage, and $500 is the plus positive getting, you're getting money to pocket. That's the passive income. So consider like that investing. So if somebody don't have never have invested, just list out where we can invest money, just find out, do a bit of research, like maybe stocks, shares, dividends, bonds, how much they pay on stuff. So this is a small assignment till we start our next session. Okay, guys, hope you all understand, and if you have any queries, you can always contact me, and yeah, we can have one-to-one session if time permits. Yeah, we'll move on to next session. Thank you.